This week on Local Experts Talk, we discuss self-managed super funds.
Hi guys, I'm Ricky from Real People Real Estate. I have my self-managed super fund expert Kimani in with us today. Now, Kimani, obviously I'll let you introduce yourself. You know, what company do you work with? And yeah, tell us what you're excited about today.
Good morning, Ricky. Thank you for having me on. My name is Kimani, like you said. I'm from Superfunds Accounting, Pty Ltd Limited. And yeah, we are accountants, and one of the services we provide is SMSF specialist services, and that's my own area. So yeah, I've been in this space for a long time.
Now, as you know, I get asked this question a lot by other business owners and by landlords, and it's not something that I can really talk about. So I'm really excited to have you on today.
Thank you.
So I guess probably the number one question I'm always getting asked is, what are some of the main benefits or reasons people have a self-managed super fund compared to maybe some of the traditional retirement options, like, you know, having your super go through your normal employer super, you know, fund?
Really, the reason for SMSFs is that some people want to take control of their own retirement investments, their own retirement strategies, and SMSFs are an avenue for those that want to take charge themselves in that manner. Those that feel that they can outperform the traditional funds.
Perfect. So are there any sort of rules of thumb, you know, if I'm looking at buying property and putting that in a self-managed super fund for argument's sakes, is there anything that I need to be aware of, like how much you know, money do I need to have in my super or anything like that that may either make a self-managed super fund a good option or a bad option for someone?
Yeah, super fund is not for everybody. So you've got to be prepared to commit time and effort in running the fund, because that's what it is. And yeah, the balance needs to be, you know, right, because there are some sort of fixed costs. Every year, the fund has to be audited, accounts have to be done. So you want to, if the fund is too small, then you are going to find that the cost, the running cost might outweigh the benefits if your balance is not right. So ASIC, back in 2013, suggested that if a member or members that come into a fund, because there can be up to 6 members in a fund, so collectively, if the funds are not at least 200,000, then it probably is not the right thing to do.
Okay, so like at least if you know without those 6 people or less having that sort of amount, really it's probably not an option to be exploring just yet.
It's not that you can't get into it, but what ASIC says is that you need to really think long and hard and know precisely where you want to still go ahead. For example, if there are plans to really pump up and you know, ramp up your contributions in the next few periods, you know, you can still do it even if the balance, you start off with less than 200,000.
And I suppose just having that conversation up front with people, it sets them up for a lot more success in that area.
Exactly.
So, you know, is this something that I can do by myself, or and you know, I think you've already answered this. Like, does it have to be friends and family? Can it be, you know, like, is there any other restrictions other than 6 people
self-managed
less?
funds? They can be a sole member, single member fund, and it can also be up to 6 members. So mostly you find couples will be in it. So most of them are 2-member funds, man and wife. Sometimes it's business partners, maybe 2 couples, 4 or 4 members. In some cases, we've had people, families, where the parents and the children are members of the same SMSF.
Okay, well, yeah, no, that makes sense. Yeah. Are there any sort of super important rules about what you can and can't do? Like, obviously, there's not a lot known by a lot of people when they first explore this. Is there any key things that you should know that you can't do this or you can't do that? Because you did mention you've got a lot of options available when you have a self-managed super fund. I'm sure there's things that you can't do to stop people from abusing that structure.
Oh yeah, indeed. In fact, and that's where we come in this, because there's, you know, this is a government system that is intended to make the age pension burden of the government at the retirement age to be, you know, lesser. So therefore, there is rules to make sure that people don't abuse the system, strict rules, and that's our role to guide members to do the right thing. So, like for example, if a fund invested in a residential property, the members cannot, or any of their relatives cannot be the tenants. right?
Well, that makes sense. Otherwise,
Yes.
really, it's not it's not a super fund. It's
Because
really just an extra
members are
investment
not supposed to enjoy any benefits until they attain the access age, which most cases is about 60 years.
Wow, yeah, and that does make a lot of sense.
And members, again, you asked about key rules. A member cannot sell an asset to their own fund, right?
Oh, so basically, you wouldn't be able to go, hey, I want to sell my house. I'll put it in
Yeah,
my
that
super.
I already have this investment. I want to put it in my fund. You can't do it that way. The only time you can do that is if you're talking about an asset that is listed, is publicly listed. There is a market. Like if you had shares, shares can be transferred into, because they are listed on the ASX. So those can be transferred into an SMSF.
So no off-the-market sales.
No, not where there is not a very full operating market.
Now, I've dealt with a lot of people who have bought properties, just obviously through my own work, that they're buying it for a self-managed super fund, and it is something that pops up a lot of time with landlords asking about how they can do that. But a lot of them won't have the money in their super to buy the property with basically the funds in their fund alone. What can you tell me about buying a property with a loan attached? Is this common for people buying property through self-managed super funds?
Oh yeah, it's common. It's just like with in normal situations where when we buy our own homes and other investment properties, we'll go for, you look for funding. So it's the same with self-managed superannuation funds, that in lots of cases, members need to borrow. There are special rules for how a self-managed fund can borrow. The idea being that the borrowing for an investment should not prejudice the entire fund. So there are special rules where the borrowing in a self-managed fund is on a system called limited recourse borrowing arrangement.
Okay.
Where that asset is ring-fenced, so that if there is any problem with, with default or anything, it's only that particular asset that is at risk, not the entire super fund. Because,
Is that so that you essentially are less likely to have all your eggs in the one basket?
Exactly. But also what that means is that lenders, because they don't have as much, recourse to other assets, then the loans that lenders are willing to advance are lesser than, usually you will get a maximum of 70% on residential properties, and with commercial, it's actually mostly 60% of the value of them.
And that makes sense, because they're going to have to look at each person they give a loan to and work out their risks. So
exactly.
it's like most things when you make a business decision. I'm sure the bank's looking at, as you said, the recourse. It's not like they can go back and necessarily chase the person.
You can't chase the members. You can attach other assets that are owned by the fund that have nothing to do with. So it's really you actually have to set up a second entity that is called a bear trust that will hold that asset and for the whole time that the loan is being serviced, and only have the title of the assets transferred to the super fund once the debt is paid off.
So with those extra options that we have, there are going to be some trade-offs. As you said, you might need to have bigger deposits. You might have some, more costs around. Obviously,
and the rates, the lending rates are a little bit higher as well. So you won't get the,
you're not going to get the super competitive rate that you normally get for your home loan.
Exactly. Yeah.
Well, no, that's great. So if I understand this correctly, so please correct me if I'm wrong, you need to have a decent amount of time to be able to go through a process of obviously having a self-managed super fund. You do need to have an entry level.
And you need to pass as well. You need to pass the what do you call it? You need to pass the test of integrity test, because ATO will not let you set up an SMSF if you have issues with your own tax.
Oh, so like if
tax
you
lodgements.
Yeah, so if you're like someone who's went bankrupt.
Yes, that's right. If you've been a bankrupt before, no, they're not going to let you set up an SMSF. So you've got to, you've got to pass that.
So I imagine that's probably the first thing you need to check off on the list.
That's
so
right,
you need to be able to be,
Yes.
as you said, like pass the, I guess the test to say you're going to have that integrity. You're going to have the time to be able to input into that.
Yes.
You need to be aware there's some extra costs involved with having a self-managed super fund.
Yes.
and you obviously need to make sure that you're not directly benefiting from those things that you're holding
and
in
if
that
you try
self-management
to
fund.
do that, you're going to get into trouble. And
I would imagine there's probably
yes.
jail time and
Yeah,
other sorts of
that too, that too. Exactly.
So
yeah.
I think that's a really good starting
Yes,
point for
yeah.
people that are wanting to take, obviously, steps to learning more about a self-managed super fund. Kimani, no, if someone is going down that road and they need to get advice, I know that you're my person, but what should people be looking for? What's the next step for them if they need to find out more information?
The first thing is really to just educate themselves, do their homework. You need to know whether indeed this is what you want to do, because, I mean, look at it. This is your retirement money for when you retire, so you clearly want to do the best thing by yourself. You don't want to set up an SMSF if it's not going to earn you more than if you just left your money, your super, with the with the big funds where the funds are. So, and that's where you need to speak to, a professional, myself or others, so that first you understand what exactly it means to set up an SMSF, what is required, the rules and all that, the costs, ongoing costs, so that you decide, your decision is an informed decision when you decide that that's what you want to do. That's where you start. Then, and for me, we've got a license, AFSL license, Australian Financial Services license, to assist people, to advise people that are thinking to do this.
And not every accountant's going to have that, because I've spoken to quite a few accountants over the years, and not everyone's going to necessarily have that specialised knowledge.
Yes.
How could someone know if someone is going to be able to have those credentials? Is there anywhere I could look, or is there anything I can Google to put myself in touch with someone if I'm finding that process of doing the research is a little overwhelming?
Well, I suppose you could start with this SMSF association. It's got its list of members. ASIC has a list of accredited, approved licensees. But yes, there are people out there that are operating without a license. So really it's up to you. You go to somebody that is not licensed, then you're not going to get the advice. But if you came to me, I have to take you through the steps as required by law, because I'm obligated to do that.
And good operators, they're going to be taking you through, like, I have this accreditation.
Yes.
This is how you know that I've got all the right credentials. And that's, I suppose, number one thing is we're talking about someone's future. If you don't do it right, the implications can be quite nasty in retirement.
If you get into, and there's been many, lately there's been a lot of tightening of rules, because lots of SMSF members set up funds when they really were not the right thing for them, and they've lost money. So that's why lately there's been lots of changes to tighten the financial advice industry, so that there's proper advice for people wanting to go into SMSFs amongst other financial investments.
And I suppose, that really means, when you have someone that knows what they're doing, they've got the credentials.
Yes.
It's probably not just the setting it up, it's the making sure you consistently staying compliant.
And I'm accountable to ASIC to show that indeed I advise you correctly, and there was basis, there was logic and rationale for what it is that the recommendation I made for you to go ahead and set up an SMSF.
Perfect. Well, look, that's been really insightful, Kimani. I really appreciate having you on today.
Okay.
Obviously, we're going to have other talks in the future,
yes.
This is something that I think people will find very enlightening, so that they can go, well,
and then also maybe to just finish on that one, once you're done with that discussion about whether or not it's the right thing for you, then yes, there's the setup process, and we provide that service. We will set up the deed for you. We will assist with the rollover of your superannuation balance from wherever it is in your existing super fund. We will help you with the registrations for tax file number, ABN, all that, so that you're up and running.
Yeah, so regardless of who you go through, these are the things that you're going to need to be able to make sure they can do.
Yes, exactly.
So, but again, look, I really appreciate you coming on.
Okay.
A lot of value there, and I know a lot of people haven't had someone who is actually coming from a place of, hey, I do this on a daily basis, because, as I said before, not every accountant does this. So, yeah, I'm sure that there's going to be lots of people that will now have some more options in front of them just by having you on to, shed a bit of light on what's commonly a bit of a secret, the self-managed super fund.
Okay.
Well, thank you, Kimani,
No,
and
thank
yes,
you.
we look forward to seeing you next time.
Thank you very too. Yeah. No, it's good. Yep.
And remember, this is not financial advice. Please speak to a qualified professional around your individual needs. And don't forget, subscribe to Real People.